This is Carl with your Consus weekly livestock update. Started out actually, starting out a week ago. We had, and last Friday seems like forever ago, but actually last Monday seems further away for some reason. But we had the cattle on feed report came out last Friday. Uh, no big shakeups there at all. Monday of this week, we had the quarterly hog and pig report. Hogs up 1% from last year, mainly from the marketing side, breeding hogs as expected. And then we had the cold storage report come out on Monday, and that did show us a few surprising numbers. U.S. pork inventory coming in at a 14-year low for November, or 14-month low overall, and a 27-year low for the month of November. So there's a little bit less pork in the U.S. pipeline than trade has been expecting. Beef inventory coming in at a 10-year low for November. So our red meat demand has picked up and our processing remains pretty slow. We'll get to those numbers here a little later on, but that's how we started out the week. And Tuesday, really kind of a non event with Christmas Eve and then Christmas break. We get back on Thursday and again, pretty quiet trade. We're watching the cash markets, and this has been the case for several weeks now. We're just seeing untested markets. We're not seeing movement at all. The feeders are sitting here looking at it and saying, look, I got my lots full. I can't get replacement calves. If I do get replacements in here, they're going to cost me an arm and a leg. My break even right now, most guys are saying, is around $200. That's above futures. I mean, we're sitting, the break even with the way replacement costs are. You're seeing just a simple break even, $10 to $12 above where the current market is, and guys are just saying, forget it. I'll just keep putting extra rig on. Pictures floating around, guys taking their fats up to 1,900 pounds. It's just unreal. So that's been a situation, and it really never did pick up all week, especially with the holiday. You're not going to see big movement. When we got to the end of the week here, total slaughter for the week on cattle was down 30% from the previous week. Hogs down 20%. Oh, that's going to rebound next week. No major winter storms on the forecast on the horizon for us. So we'll see that pick up a little bit, but boy, it's getting tougher to get these cattle to move out of lots out here. Um, then we had a surprise this week when we got to the end of the week. And this was the Chinese government coming out and saying they're going to launch an investigation into that country's beef imports. It really didn't affect the futures market all that much, and it's not really going to be a much of a factor for the U.S. A little backstory. Chinese beef imports skyrocketed following COVID because number one, they started to run low on their supply, and number two, the consumer's diet shifted in China. They wanted more beef. They want, a beef in their diet. They just wanted more, and so they started to bump their imports up, and they bumped them up considerably. Last year, I should say, their imports equaled 36% of their domestic production, way above the consumer demand they have, and now they have a burdensome inventory of beef. Where have we heard this before? Just about every other commodity that China imports. So what China's doing is saying we're going to investigate. Do we need these? And bottom line is, at the end of the day, it's going to affect Brazil more than the United States. Brazil supplies China with about 42% of its beef imports. That's followed by Argentina and Australia. The United States provides China with about 10% of its beef needs. But the beef that China takes from the US, high quality. Wagyu beef, you're talking the high end, as high as you can get. That is what China wants from the United States. And while it's just 10% of China's market, it's about $14 billion in beef trade that they take in. So, I mean, it's a huge market there. Um, I do expect to see, South American and Australia sales will drop. China will cut them, but the U.S. should come out of this pretty good. To that, a week of volatility has really been driven by the funds. And this is what I really want to focus on. And this is what I want you to be the main takeaway from this today. Fund activity is driving the livestock, period. Yeah, we have these stories and we have, the export and the trade in this, but it comes down to fund activity. And when I say fund activity, funds are sitting here with record long live cattle and live hog positions and feeders. They're getting up to a record size position. The funds just see a bullish outlook for the red meats, mainly because of the low inventory in the U.S. The fact the U.S. cattle herd is the smallest it's been since 1951. We have no imports coming from Mexico right now. Our imports from Canada are questionable if we have tariffs placed on. And we have a consumer that is still buying red meat, even at elevated values. They are buying red meat. This has the fund crowd and the speculators continuing to add to the livestock complex longs. As long as they do that, we will see support. However, when that tide turns, it's going to turn sharply. I would not overstay my welcome in the market at all. That is the wrap up of this week's top livestock stories.